Let's bring in Joe Balestrino with Federated Investors. Joe, welcome, fixed income market strategist there at Federated. Good to see you. So the story with this latest auction seems to be that people really showed up for it. What do you think?
They certainly did. We were a little bit surprised. It is the shorter end of the curve. We've stepped up. We've stepped out from the very short end in the most recent auction out the 3-year. So we think the 3-year is still trading off the fact that monetary policy is still dead in the water. We're at 0% Fed funds. Mr. Bernanke keeps telling us we're going to stay there. A tougher test will be as we move longer in maturity later this week.
And I'm seeing a real push into bonds here on the back of the results of this auction. It's interesting. I was talking about this with Luke just a moment ago. Is there a disconnect between what equity buyers and bond buyers are thinking right now?
We certainly think there is, because you've had well-behaved markets virtually everywhere. Equity buyers, non-government buyers, which in essence I view as equity buyers, corporate bond buyers, emerging debt buyers. Everything's doing well. At the same time, the yields are coming down. So it's a very bizarre situation. It's setting up for somebody's right and somebody's wrong.
Who do you think is going to be right at the end of the day?
At the end of the day, we're out of the woods economically speaking. I think we grind a little bit higher grudgingly. Yes, it's all on the basis of government support, spending our money, so to speak. But nonetheless, most of the economic statistics are better than we were expecting. The earnings season was okay. We think we're in a new higher trading range for, say, the 10-year, which is to come. And maybe you're supposed to sell it at these levels.
So are you saying a flatter yield curve then as we come into the end of the year?
Probably, and that would, I would almost describe it as a slight bear market flattener, in essence, with short rates, meaning 2- and 3-year rates maybe going up a little more than the long end. The wild card on the long end, the jury's still out, and it's the word inflation. Some don't care about inflation with all the slack in the economy, but others point to, you know, the gazillions of dollars that we've printed.
I think more people are caring about inflation. If you look at what the price of gold has been doing today, buck over $1,000 an ounce, although it's come in some to $997.
Right, and that explains in part at least why the yield curve is so steep from a historic basis.
So the fixed income strategists of late have been telling us that the best value is on the front end. You're saying you expect to see rates come up on the shorter end of the curve. So would you agree with that statement?
I would agree with that, yes, for sure. And that would be very typical of an early stage recovery. We're not quite there yet, but all signs point to that being 2010. So we think the Fed's back in the game next year, raising short rates.
So let's see, Joe, we've got 10s and 30s coming to auction throughout the remainder of this week. Do you expect the same kind of demand, strong demand?
I do not, but I did not today, so it's full disclosure. But I think today, as we said earlier, it is supported. You know, the 2- and the 3-year end seems to be supported by effectively no yield on the Fed funds rate. Out the curve, you do have inflation concerns, and we probably have to pay folks to come with the demand.
Okay. We'll see what happens as we watch those auctions for 10s and 30s a little bit later this week. Our thanks to Joe Balestrino at Federated Investors. Let me go ahead and just tell you what's going on in the bond market on the back of that interview. The 10-year is up 6/32 right now, so that's gone up in the wake of this 3-year auction, with the yield coming down to 3.42. On the shorter end of the curve, where Joe and others say they see more value, up a tick with the yield coming down to 2.41%. And again, real strong demand for that 3-year auction today. We had a bid to cover ratio of 3.02. The last 3-year auction, which was on August 11th, the bid to cover was 2.89. So 3.02 versus 2.89, real strong demand. And then the indirect bidders also showed up, 54.2% foreign buyers. That 3-year note drew 1.487% today.